today on the Tearsheet Podcast.
And then you have fintechs who actually work and collaborate with banks and who offer their services to banks so that banks can focus on what they do best, and the rest they can basically insource like this because they get the best-in-class products from their partners, from fintechs, for example, again, can offer also their customers better services, better customer experience, better products. And that's exactly where Deposit Solutions is coming from.
Welcome to the Tearsheet Podcast. I'm Zack Miller. Deposit Solutions has an open banking solution that connects customers and banks. Working in 20 European countries, the company has 30 million depositors on the platform, with 25 billion euro in deposits. And now Deposit Solutions is active in the US. We have Philip von Girsewald, Deposit Solutions CEO in the US, on the podcast to talk about what challenges banks are most looking to solve. We talk about the US adoption of open architecture and how COVID-19 has generated a new perspective on how banks view and work with fintech partners. Philip von Girsewald is my guest today on the Tearsheet Podcast.
Yes, hi, Zach. Nice to meet you, and thank you for the opportunity to talk to you. My name is Philip von Girsewald, and I'm the CEO for Deposit Solutions LLC, the US subsidiary of Deposit Solutions. Previously, I was an executive at Deutsche Bank for 20 years. I was responsible there for the global corporate M&A business, as well as regulatory strategy. And I also ran venture capital and private equity at Deutsche Bank for some time.
Amazing. And thanks for joining us, Philip. So I'm curious about that transition from Deutsche Bank into Deposit Solutions. Before we jump into Deposit Solutions, what was the connection between the work you did before and sort of what you're doing now?
Yeah. So when I was at Deutsche Bank, around the end of 2015, I changed role with a few other colleagues within the bank, and we started developing a new blueprint digital bank for Deutsche Bank in the US. The idea was that that would be a new way for Deutsche Bank to run its banking operations. Mm-hmm. And when Deutsche Bank, as we all saw, got into some trouble, the bank decided to focus on its core activities. And I decided that I loved the new digital banking world very much, and decided then to eventually go over to the fintech side. And with Deposit Solutions, I found the perfect company who does exactly that. Deposit Solutions is a fintech that works with banks, that cooperates with banks, and provides a platform for banks to gather deposits.
So curious, before we hop completely into Deposit Solutions, are there carryover skills that you think came from the big bank, from Deutsche into Deposit Solutions that, I don't know, may make you more successful in your role today?
Well, I think first of all, having worked 20 years at Deutsche Bank in very, very close cooperation with the management board, as well as with the treasury and finance and other departments, I very much understand how bank works, how bank works, both locally as well as globally. I also was on the board of various subsidiaries, so I know what the local demands are, and I know how regulators think. And that provides me with the ability to understand what bank needs, what bank wants, and to effectively talk to them. So I think that is a great way to carry over from banking into a broader financial services area, fintech, and then work with banks.
So that's a great segue into my next question, Philip. So what do banks, what are they looking for? What are their challenges today?
Yeah. So I think in general, maybe I take a step back and say, because fintechs are often associated with competing with banks, and in general, we need to take a step back and see that there are two kind of fintechs. One is those who compete with banks and have been very successful in gaining customers away from banks by offering sometimes better products, sometimes just the right customer experience. And then you have the fintechs who actually work and collaborate with banks and who offer their services to banks so that banks can focus on what they do best, and the rest they can basically insource like this because they get the best-in-class products from their partners, from fintechs, for example, again, can offer also their customers better services, better customer experience, better products. And that's exactly where Deposit Solutions is coming from.
So can I take a step back and I think part of what we're talking about here is, more of an open architecture. Can we talk about, you're a U.S. subsidiary of a European company, right? Like, what is the U.S. adoption of open architecture technology, and sort of where do we fit in sort of the global rollout of that?
Absolutely. So first of all, I think you described the word open architecture perfectly well. There's often confusion in the US when you talk about open banking, which is associated in a way with open financing services or something like that, which is often associated with fintechs and other companies gaining access to bank data and bank's customer data and being able to use it. So open architecture is not that. Open architecture means that banks can use established solutions, established standards by third parties, and can use these as a product which they insource. So basically, that's the opposite way of outsourcing is when banks give away something, they insource services to get better quality in the end for the customers. And Deposit Solutions is one of those platform players to offer banks an alternative way to gather deposits.
So that's interesting. So where do you see, Philip, from where you sit, where's growth coming in the U.S. market?
For Deposit Solutions or in general?
Particularly for you, and I guess what that means for the market in general.
So, as I said, Deposit Solutions, we are a very well-established European company. We're working in Europe with over 100 banks and have been very successful there, having transmitted more than 25 billion euros in deposits. And in the US, we're about to start. And here we position ourselves as a new way for banks to gather deposits. In a way, we offer banks the ability to digitally connect through our platform with consumers, and through that, banks have the ability to raise deposits with wholesale simplicity, while the deposits still exhibit retail characteristics like stickiness, granularity.
Got it. So I guess I'm stuck on that. Can you talk a little bit more about actually how the mechanism works?
Sure. So Deposit Solutions is in the end is a platform. Mm-hmm. And on the one hand side, we allow banks to, through the platform, gather deposits by offering savings accounts and bank CDs to customers. Mm-hmm. Customers, on the other hand side, gain access to these products through our distribution partners, who again connect to the platform and have then access to the products which the banks want to offer. And customers through a single account then have the ability to deposit their money at the participating banks. One of those distribution channels is safebetter.com, our US distribution front-end website. And there customers can go and see, for example, the offerings of the participating banks. Then they can sign on very effectively within a few minutes, open a single account. And once that's opened, then they can deposit money and withdraw money through that account at the participating banks.
Interesting. And you wouldn't describe that as a marketplace?
Well, it is not a marketplace, because a marketplace, for example, if you go to a marketplace, you see the offerings, but then you have to sign up with each and every bank. You have to open an account again and again. So here we just have a single account opening. And after that, they can basically manage the account effectively. And it's not in the US a typical brokered CD, which you see. It's actually savings account and bank accounts, which allows for laddering, for prolongations, for effective managing of the cash as an asset class. And I believe that's very different.
Yeah, that makes sense the way you explained it. So given the fact of where you are in your maturation, like what are you doing to gain market share in the US? What is your launch strategy? You mentioned you have this website that sort of acts as a front end of the distribution. Can you talk about, I guess, some of your efforts to launch it to the US market then?
Sure. So on the one hand side, we're signing up banks to be on the platform, and we are talking to few handful of banks, and some of them have already signed up, and others are in the process of signing up. So that is definitely one way to gather the inventory on the shelf, which we are then going to market. And on the other hand side, we are marketing that through Save Better, but also we are using digital marketing through affiliates, through influencers, and wherever else, to then promote these products and help banks gather deposits here. So in the end, what we're going to do is a product-led marketing campaign for the participating banks and for the consumers to provide choice, safety, and convenience.
So I understand the strategy. Like what kind of channels are you going to use to get that through? You mentioned influencers. Like what kind of communications channels?
Well, it's a full array of digital distribution. We definitely will have to test a bit how the US exactly works, but all from what we have seen so far, using our European experience in digital marketing, and then adjusting that to the particular US needs, but also to see where we are successful. That will definitely determine it. But in the end, it's the affiliates. It is as you said, it's potentially press. It's influencers, blogs maybe. Zack, we can have something on your blogs and on your publications. So the full array of digital distribution in the end.
Got it. And Philip, how important is that it's savebetter.com?
Well, Save Better is one distribution channel, and we're working on adding others.
Mm-hmm.
In the end, Save Better is there to demonstrate how it works. It's a bit of solving the chicken and egg problem.
Mm-hmm.
If you start into a market and you don't have distribution and you want to sign up banks, they'll say, yes, sounds great, but how are you going to do it? And then you'll say, well, I need to find my distribution partners. On the other hand side, if you go to a distribution partner and say, hey, you want to sign up, and then say, hey, yeah, but where are your banks? So by having our own first distribution channel, SaveBetter.com, we're able to solve for that and show and demonstrate how it works. We're also able to be independent of third-party distribution, and that's the way we did it in Europe. And then we will add other distribution channels. These could be banks, this could be non-banks, this could be fintech, if you talk about non-banks, but it could be all kind of digital ecosystems who want to add a deposit product to their ecosystem, which while maintaining the customer relationship, which is key for what we're doing. And by that, they basically allow the customers to keep the money in the system, to make the ecosystem stickier for the customer.
Got it. And I'm sure, Philip, as you were crafting your go-to-market plan, COVID-19 was not included in that go-to-market plan. So could you talk to me a little bit about, I guess, how banks are thinking about partnering with a fintech or a solutions provider like Deposit Solutions?
Oh, I think you're absolutely right. I think nobody had really COVID-19 in the strategy about half a year ago. But I don't think that COVID-19 overall changed the strategy. What it did, in my opinion, is it accelerated the underlying trends. So basically banks were before already using some kind of digital channels, right? I mean, in the end, if you go back, it all started with some kind of first online banking, then mobile banking, and then the apps came through the mobile banking, and then we started developing ecosystems. So that was all out there and was all used. What COVID-19 did is it accelerated all of these trends, because from one day to the other, it was necessary for most people to no longer access their bank through the traditional physical channels, but to be completely digital. And so we have seen that in other industries as well, if you look at it. So, for example, we all had self-checkout in supermarkets, but before nobody used them because they were somewhat inconvenient, and then it was easier to go down the traditional route. Now, COVID-19 again, this changed. Now people got used to it, the customer experience got better, and it all accelerated the underlying trends.
Well, I'm curious the way you described it. Also, it felt like, as you said earlier in your commentary, there is this kind of misperception, I guess, of fintech, necessarily competing with incumbent banking. But here it's sort of like accelerated cooperation, right? Like a lot of the banks, if they wanted to be able to compete in today's market, particularly if branches are closed, they had to turn to fintech quickly to get things moving. I'm just wondering, is that in line with what you were just saying? Like, sort of just, it's more the same. It happened in a more compressed time frame.
Yes, I think that what you're saying is a good summary. I think it's happening in a more compressed time frame, and that's the problem with technology. And it's a problem with technology, particularly for those banks who have either a restricted investment budget, who have restrictions on development time, or who are working with old ledgers. That digitalization takes a lot of time, takes a lot of money, and success is not guaranteed if you do it by yourself. So now, working with fintechs as in an open architecture way, as a service provider, can help bank accelerate that, because they can insource most of the products which otherwise they would need to build for themselves. And then they can focus, on the other hand side, on what they're good at. They can keep their human touch through the traditional banking. They can keep focusing on their product, on their local market know-how, while they can get the state-of-the-art products through third parties. And deposit solutions, we allow banks to gather deposit in a new way. So here we open up a diverse network of distribution partners, which make the distribution channel less systemic, because we'll go off the beaten track. And at the same time, it allows banks to raise deposits with wholesale simplicity, while the underlying deposits exhibit retail characteristics like stickiness and granularity, and that allows banks to exercise more control, because you don't have an institutional deposit broker in the middle, and it allows them to flexibly manage their funding costs.
So I'm interested, in how deposit solutions, I guess, prices its offering, because you are somewhat, like you said, you're not a broker necessarily, but you're doing more than just providing them, a digital bank account, your partners. So like, do you charge on the assets that you bring them, or you charge on, I guess, I don't want to put words in your mouth. How do you charge?
Yeah. So first of all, let me just be clear. We are a platform. We're not a bank, nor do we provide banking services. So we work with a bank, with a partner bank who does that. So Deposit Solutions itself does not touch the money. Deposit Solutions only facilitates the instructions and the platform, while the actual money is moved by a bank. So the money stays in the system and is safe. as it relates to deposit solutions business model, we charge banks a fee on the deposits they're gathering, which means then it's a free option in a way, right? If you offer a certain product at certain terms and you can't get the deposits, well, you don't pay for it. If you do, you know exactly for what you're paying for, and so you can manage your cost base very effectively.
That makes sense. And I'm sorry if I didn't quite understand it when I asked that question. It's clear to me now. Where do you think, Philip, the market is headed? You're sitting at this, sort of market launch phase in your career in the US. Where do you see the market headed in the next, 9, 12, 24 months?
Sorry if I ask again, when you say market, what do you mean? The banking, the general market, the deposit market?
Yeah, that's a really good point. I would say the deposit market and sort of how banks are looking to deposit solutions to help them grow assets.
Well, I think overall, I believe that banks will continue to rely heavily on deposit funding because it has a different quality for them, and particularly if you look at liquidity and matching maturities for banks, which is important from a risk perspective. So deposits will remain very important. Banks in the US, the broker deposit market is a very well established market. Currently, the FDIC has put out a request for comments on the proposed rule or the proposed new rule for broker deposits. We'll see where that goes. But where deposit solutions really fits in is that on the one hand side, banks, if they want to have core deposits, I would say, who have a similar characteristic like ours, they need to go out and acquire the customer relationship and maintain the customer relationship to have them qualified as core and have these characteristics. But if they can't fully use that relationship because a bank in Kansas can't really provide a mortgage to the customer in California because they don't have the market know-how and so on and so forth. So then they're not able to really provide the relationship, the full customer relationship, and basically pay for the relatively high customer acquisition costs. On the other hand side, if you just take in brokered money at any point at maturity, which is with sweep every day or with brokered CDs at maturity, you're forced to basically pay market prices at that point for the external institutional broker. With our platform, it allows you to be to get the best of both worlds because we help you raise deposits. And then we leave it up to the bank to decide how they want to manage the underlying interest costs, so basically they have control and flexibility over their funding costs.
In the remaining time that we have, I'm curious. It may be too early even to talk about product pipeline, but how are you thinking about that? I guess it sounds to me a lot like you're basing the U.S. launch off of the experiences you guys have had in Europe. Is there a product pipeline? Are you continue to roll out other products? Can you talk to us about sort of how you're thinking about the evolution of your product?
Well, we want to start. I think we want to start as we see ourselves as a platform and working with banks. First part of our growth strategy is to add banks to the platform, to allow banks to use the platform on the one hand side. On the other hand side, to add distribution partners. So by that, I believe we will have our hands full for the next couple of years to build that platform. And in general, I think with savings accounts, high yield savings accounts, with CDs, with no penalty CDs, this is a good starting point for our product suite.
Wonderful, Philip. Thank you for joining us on the Tearsheet Podcast today.
Thank you very much.